Okay, welcome back. Hope you're having a good morning so far. The bulls definitely look like they would be because of the SGX Nifty indicating that the start will be well in the green. But we've been dithering. The last 2 days, the market has closed at the low point. So let's see how today progresses. Lots of stocks on our radar. So let's get straight to it. Our research team is joining in. Abhishek is here first up to tell us about REC's performance and how that is shaped up. Abhishek, morning.
Morning, Sonia. So, REC, the business momentum is not aiding the PNL momentum. Gross NPA ratio has come in at 3.42%, which is the lowest in last 21 quarters. Net NPA ratio of around 1% is the lowest in last 29 quarters. Business momentum has been stronger. Disbursements up 138.5% YOY and about 24.6% sequentially. So, the loan growth momentum has been steady at around 13% YOY and about 5.8% sequentially. But take a look at the net interest margin and spreads. Both of them are at 20-quarter low or the lowest in last 5 years. The net interest income is down about 12.25% YOY and about 3.3% sequentially. Even in the previous quarter, that is Q3, the NII was down 12.5% YOY and 11% sequentially. So there is pressure on the net interest income for second quarter in a row. The PAT is up 31% on a YOY basis and about 4.3% sequentially, given the fact that OPEX or operating expenses on the lower side, and they continue to make provision right back, which is actually aiding the PAT momentum. Back to you.
All right, thanks a lot for that, Abhishek. Well, Vivek joins us to tell us about a couple of numbers that came post-market as Thermax as well as Honeywell Auto. Hi, Vivek. Morning.
Well, good morning. That's right. So, Thermax has delivered a good set of results, strong growth, robust growth momentum, as well as good ordering activity seen. So, revenues have jumped up almost 16% on a year-on-year basis. EBITDA is up almost 48%. And, the good part is margins have expanded by over 190 basis points. Profitability too is higher by around 52%. Now, what the company is saying is that the margins was mainly aided by stable prices across the commodities. So, stable steel, chemical as well as commodity prices have aided the margins for the company this quarter. Also, they are saying that going forward, demand is being seen, from very strong government spend on infra as well as transportation. Order book is quite healthy at over 2,250 crore. Now, the company has also gone ahead and reorganized its business structure into 4 separate verticals. We'll quiz them more on that later. And, what Macquarie is saying is that, it's a better than expected execution aided by stronger than expected margin performance. Now, coming to Honeywell Automation, slightly mixed, but still a good set of numbers from the company this time around. Revenues higher by 27%. Margins too quite strong, almost 300 basis points improvement. Profitability higher by 54%. Now, what Nomura is saying is that the gross margin has recovered to 50%, and this particular number has been seen after a while in Honeywell Automation. Also, what they're saying is that the dividend payout has come in at almost 19% for FY23. So, again, a good set of numbers from Honeywell as well.
All right, thanks a lot for that, Vivek. Well, let's focus on Jindal Stainless. Remember, this is the first quarter that they're reporting as a consolidated entity. That's Hisar as well as Jindal Stainless as one entity. On the top line, there was no growth. That's because prices are much lower. And the operating profit was down by closer to 20% on a year-on-year basis. Now, we're looking at the margins, and there is some improvement on a sequential basis. And that's the reasoning why we're going with green on this one. For the India business, we have the volumes number, which were much higher. It was up by in double digits for the past quarter on a sequential basis. And there was some marginal improvement on the EBITDA per ton. That's the calculated number that I've put out. The net profit number, though, came down because of a weaker than expected operating profit on a year-on-year basis. Sequentially, there's still an improvement. And the net debt between both the entities, that's the standalone entity as well as subsidiaries, is nearly around 2,900 crores odd. But they're saying the peak debt goes to around 5,000 crores. We'll be joined by the management at around 10:30 a.m. today to get further clarity. But I expect the stock to open up mildly in the green. But Sonia, you're tracking a couple of auto ancillary names?
Absolutely. And the run has been pretty good this time. I mean, it's largely margin driven, right, for the auto ancillary names. I think that's something that you're seeing in Endurance Tech and JK Tyres as well. So I'm going with green for both these companies. Let me start with JK Tyres because as we know, the entire tyre pack has delivered this time around. JK Tyre's strong earnings, double-digit revenue growth is what you're seeing. The margins have gone up 340 basis points year on year, and the profits are up quite a bit compared to what we've seen last year. The India business is very strong. It's an 8.5% growth that JK Tyres has seen in the India business. The Mexican business, Tornel, has done well on the top line, but the EBIT is under a bit of pressure. So we'll, of course, chat with the management later on and find out more about that. Endurance Tech is the other one I'm watching. Over there as well, the Q4 revenue growth has been decent at 7.8%. Once again, it's a margin beat. EBITDA margins at 13.6% versus 12.9%. And the consolidated revenue growth in the full year has come in at 16.6%. So I'm going with green over there as well. Largely, the the auto ancillary space has delivered this time.
Okay, and we'll have the management of JK join us, right?
Yes.
Later, JK Tyre management will be with us to talk about the numbers. More earnings from the fourth quarter, stocks and news. Surabhi standing by with that list. Surabhi, morning.
Morning. So let's start with RailTel first. It was a mixed set of numbers. The revenue was up 51%, but the margins were at a multi-quarter low. Margins came in at 14% versus 21% same time last year. The PAT was up 40%. Now, when you look at the internals, most of the revenue growth has come from the project services segment, where the revenue was up 132%. In the telecom segment, the revenue was up only 5% and the margin compression of 400 basis points over there. So 16% versus 20% in the telecom segment. Moving on to restaurants brand Asia, largely a good set of numbers. The revenues were up 29%. They managed to maintain the gross margins at 64%. The EBITDA was up by 35%. Again, margins of 5.3% versus 5.1%. And the PAT was down 2%. It was a loss of 80 crores versus a loss of 81 crores. And that is largely because of the losses in the Indonesia geography have widened. Moving on to Whirlpool, again a weak set of numbers over there. The revenue was down 2% at 1673 crores. They saw gross profit margin compression. It came in at 31.6% versus 32.3% same time last year. The EBITDA was down 28%. They have seen a significant margin compression, came in at 6.3% versus close to 9% same time last year. The management did say that the market growth in Q4 has been muted, especially in the refrigerators and the air conditioner segment. Apart from this, I'm also watching out for Vedant Fashion, as the promoter Ravi Modi Family Trust is going to sell 7% stake via OFS at a floor price of 1161 rupees per share, and they're going to sell an additional 2.8% stake via the green shoe option. Now, the OFS is set to open on May 18 for non-retail investors and May 19 for retail investors. Morgan Stanley has written on this, and they've said that the proposed OFS is primarily for purpose of meeting SEBI's minimum public shareholding norms. If completed, this would bring the promoter's stake down to 75% from currently close to 85%.
Okay, thanks a lot, Surabhi, and thanks to our entire team actually for joining in early this morning and helping us prep for the day. Here's a quick recap of our top stocks. Stocks with positive news flow: Thermax, Honeywell Auto, Jindal Stainless, JK Tyres, Endurance Tech and Restaurants brand Asia. While stocks with negative news flow, there's REC, Whirlpool, RailTel and Vedant Fashions. But let's also try and get a handle on what's happening in the world of crude. Manisha Gupta joins in for a roundup of all the action there. Manisha, good morning. Seems like the debt ceiling issue is not a worry, at least for the US anymore. But you tell us, what is the impact that all of this has had in the world of crude?
Oh, well, yeah, thank you for that, Sonia. A lot of uncertainty, clearly, but overnight we saw the crude oil prices gain up by 2.5%. Some bit of a decline coming in right now as the markets are awaiting more developments on the U.S. Debt ceiling front, really. But there are various statements also coming in from banks and brokerages suggesting that the bottom in the crude oil prices may have been done, and we could be looking at further gains coming in for the crude oil prices. It has been a good overnight market for other commodities as well. The industrial metals have seen gains. The U.S. dollar index trading at a 6-week high clearly seems to be putting some pressure. But if you look at copper, zinc, aluminum, we've seen nearly 2 to 2.5% of gains come in the overnight markets.
All right. Thanks very much, Manisha, for that. So commodities in focus as always. Well, we'll take a very quick break here. We'll come back. Deepan Mehta of Elixir Equities will join in for some fundamental stock check. We'll also be joined by the management of Forgings to talk about their fourth quarter numbers. Fourth quarter earnings were subdued for the company. We talk about what F524 will look like. Stay with us.